Good day, everyone, and thank you for joining me. My name is Russell Gard, Managing Director at Forward Prosperity. Today, I'm going to walk you through the latest inflation data and interest rates decision for June 2026 and what it means for you, your family, and your debts. Let's start off with the headline. Australia's annual inflation rate has decreased down to 4%. While that is positive movement, the latest inflation reports still show some concerning pressure. The largest contributors to the latest inflation measurement was housing, which jumped 6.5%, food and non-alcoholic beverages, which rose by 3.3%, and transport, which also saw a 3.3% rise. As you can see on this chart, after a very volatile period, inflation has come back down from its recent peak but still remains above the Reserve Bank of Australia's inflation target band. While headline inflation eased, core inflation, measured by the RBA's preferred trimmed mean reading, is actually rising. Trimmed mean inflation has now risen stubbornly from 3.3% to up to 3.6% over the past few months. This is important because the RBA looks through temporary volatility and focuses on underlying persistent inflation. The fact that core inflation is trending upwards, despite the fact that general inflation is falling, tells us that price pressures are still very much embedded in the Australian economy. The biggest culprit in this latest inflation report is clearly housing. Australian house prices have risen sharply due to the federal government's ongoing struggle to meet its home building targets, combined with record levels of immigration the current Labor government is allowing. This has created both stronger demand and limited supply, pushing rents and purchase prices higher than ever, and these higher property prices, of course, feed directly into inflation numbers. Housing is now the dominant driver of inflation, and until we see meaningful progress on new housing supply or a reduction in immigration, this pressure is likely to remain. This latest inflation data shows that we have mixed inflation readings. Headline: Annual inflation is falling, which is certainly welcome, but the trimmed mean inflation reading, which is the more important underlying measure, is rising. This suggests ongoing price volatility and tells us the battle against inflation is not yet over. In response to this environment, the Reserve Bank of Australia kept the cash rate on hold at 4.35%. After three consecutive interest rate hikes earlier this year, the RBA has moved to a wait and see approach. The RBA is watching incoming economic and financial data very closely before deciding whether further interest rate tightening is needed. One recent positive development is that the negative effects of the 2026 Iran war are finally starting to wear off. Global oil prices have fallen since late April, and as you can see on this chart, Brent crude dropped from over 118 US dollars per barrel down to around 84 US dollars in late May. This fall in oil prices is helping to ease transportation and fuel costs here in Australia, which is definitely welcome relief for many households and businesses. One recent positive development is that the negative effects of the 2026 Iran war are finally starting to wear off. Global oil prices have fallen since late April, and as you can see on this chart, Brent crude dropped from over 118 US dollars per barrel down to around 84 US dollars in late May. This fall in oil prices is helping to ease transportation and fuel costs here in Australia, which is definitely welcome relief for many households and businesses. For families and mortgage holders, this latest inflation data brings a cautious sense of hope. Borrowers should welcome the fact that inflation is moving in the right direction. The sooner inflation returns sustainably back to target, the sooner the Reserve Bank of Australia can begin cutting interest rates. Lower interest rates would provide much needed relief on mortgage repayments, which currently remain a significant expense for many Australian households. Having said all of that, the RBA board has been very clear. They will not hesitate to increase the cash rate further if needed. The Reserve Bank of Australia's mandate is price stability with full employment, and they remain focused on both. As highlighted in the RBA statement, the board is focused on its mandate to deliver price stability and full employment. It will do what it considers necessary, including increasing the cash rate target further if required. This is a strong signal that interest rates could still go up if core inflation does not moderate. So, what should you do with this information? The best step right now is to review your current mortgage and debts. Even small changes in strategy today can make a big difference over the coming years. Whether it's considering a fixed rate option, reviewing your loan structure, or exploring ways to pay down debt faster, our professional guidance is highly valuable. At Forward Prosperity, we specialize in helping families like yours navigate exactly these types of market conditions and are always happy to help you understand important concepts in finance and economics. Looking ahead, we have important data coming soon. The next inflation update is due on the 29th of July 2026, followed then by the next RBA interest rate decision on the 11th of August 2026. These two upcoming releases will be critical in determining whether interest rates stay on hold or move again. At Forward Prosperity, we will be watching these upcoming reports very closely and of course will provide you further updates when the time comes. At Forward Prosperity, our mission is to help you build a strong financial future no matter what economic environment we are in. If you'd like personalized guidance on your mortgage, debts, or overall financial position, I strongly encourage you to book a free, no obligation assessment on our website at www.forwardprosperity.com. Thank you very much for your time, and if this has helped you, please drop a like, comment your biggest question below, and subscribe to the Forward Prosperity YouTube channel for more economics and financial updates.